All right. Yes, ladies and gentlemen, welcome back to the party. Glad you decided to join. Listen, this video is going to be about the top stocks to watch for 2026, so you don't want to miss it, all right? Stick around. Do me a favor. Smash the like button, why don't you? Go ahead and share this video with those who might need it. That way, YouTube knows who to send the video to. That's right, a very, very important message for the YouTube community. YouTube says that 70% of my viewers are not subscribed. Why not subscribe? It's free. You've been watching, right? Smash the like button, share the video, get ready for this good game, because I tell you, I really got good game for you this week, and this is the one you don't want to miss. I'm Coach UV. This is the unique trading group where strategy meets mindset and discipline turns into income. Now, enough of the intro. I know what you guys came here for. You came here to get those top stocks, so we're going to go ahead and do that. Let's hop over to the SPY. Now, what are the institutions doing? What are they doing? This is the big question. The big question that everyone is asking, all right? And I'm talking about George Soros, Cathie Woods, BlackRock. They're moving billions towards specific tickers. And in this video, I'm going to break down the top stocks to watch in 2026 based on the real money rotation, the AI megatrends, commodity super cycle. You know, everybody been talking about the gold and silver, and the strategic positioning by the world's largest investors. By the end of this video, you're going to know what stocks smart money is loaded into and why you should be paying attention. All right. So the rotation that we're speaking of, first of all, one of the biggest shifts we're seeing in the early 2026 is what I call the global money rotation. And this is where investors are rotating away from the crowded mega cap tech and into financials, small caps, and even crypto conversion plays. All right. And this isn't really about rumors. It's not speculation. More so, it's looking at the data and looking at the shift in the money rotation. And there's ways to do it. It's backed by actual institutional positions, and we're going to break that down. Now in front of you, like I said, we have SPY, and we're going to briefly tackle to this and get to other stocks, because I tell you, there are some ones that you might know of and some ones that you don't. And you're gonna want to get this information so that you can go and check those tickers. First, to start off with, though, we have SPY. Now, we've been in this range back and forth. We've already talked about this, guys. If you've been watching the videos, you guys know that we've been on top of SPY, Tesla, the Qs, and we kind of been calling it spot on. And so we're right here on time, understanding that we have this rotation of money. The banks were buying last week. They loaded up, right? And so now what we have is rotation coming to the open. The time of this recording is 6:02 p.m. And we got some rotation going into it. The futures market just opened. I see some rotation to fill up some of these gaps right inside this range. Now, I don't expect price to just automatically go all the way up, all right, and just burst out of this range and continue to go. We could do that, absolutely, but right now we have to focus on the now. And the high probability setup is saying this, that if we can fill the gap, right, pay attention, right here we have a gap, all right, in the market. If you don't know what a gap is, I'll quickly tell you, it is a inefficiency in the market, all right, where no buyers or sellers existed at that time. Okay, gaps, it's a fair value gap, or sometimes it could be void, right, of position. But right now we have this gap, so we could fill the gap, all right, and we could do a move like this: gap, fill, and reversal. When we come back down, all right, we could do that, or we could do opposite move, which is the gap, fill, and go. Looks something like this. We fill the gap, we break out, come back, and we continue. Now right here is where I want you to pay attention to, because I don't want to assume, and you guys don't want to assume, it's the wrong thing to assume, that we could just automatically continue high. So what am I saying? You want to take profits here. You can secure profits around here in this gap. It depends on your risk, how much money you want to make, and how much are you sacrificing. I would stress to wait for prices to pull back. All right, we're already up, and if we open above previous close 689.43, we are going to see continuing prices towards the high side. All right, now this is about the stocks, all right, the big money rotation, and I wanted to show you guys this just for a second. Things are really heating up. And we checked out some information from the World Economic Forum, and I'm telling you guys, the Global Risk Report for 2026 really says a lot about the urgency that we need to be paying attention to. And so I want to just double back, all right? Now, gold, copper, other industrial metals have reemerged as core portfolio hedges. Precious metals also are being bought at safe haven. You guys know this already. We've seen the charts. We've seen the YouTube channels talking about silver, how it's skyrocketing, and gold continues to go. We understand that, right? But while the industrial metals get structural demand, there's something missing, right? And it's kind of hidden in the actual infrastructure of it. Because demand for AI data centers and the electrification is what's going on. It's a strong way to play this. So consider gold exposure for something like a FNV, all right, Franco-Nevada. It's a royalty company that benefits when gold prices rise in industrial metals via iShares, MSCI, the Global Metals and Mining ETF pick. All right, I'll show you that in a second. All right, let's go ahead and go back to the charts. All right, let's go to FNV. All right, FNV is your play for miners and metals. Okay, all right, at $260. Let's go to a higher time frame. Start on a daily. All right, for a couple of days this stock has been pumping. All right, we got some continuation, some higher lows, nice structure here. All right, we got some nice structure here. And are we above the point of control? Are we above the point of control? We are above the point of control. Make sure you guys can see the screen here. All right, now this is a part of metals and mining. Remember that, okay? So play that you could use for 2026. Don't forget that, okay? Right here we have a point of control. Buy stepped in and took control. We have some continuation. We also have what we call higher lows here. The structure is bullish, okay? We have consistent step ladder up towards the upside, okay? What you want to watch for, okay, is a structural break, all right? We have to break above the neckline and also a simple line break. Here's your neckline. You guys seen this pattern before. Let the bears try once, let them try twice. Remember, it does not have to be perfect, right? As long as you see a W, okay, it could be perfectly double bottom or it could be a little sloppy, okay? You don't really know how the cards are going to play out, but waiting patiently and understanding proper risk, this is how you manage those trades. And now you want to wait for that structural break, and also you want to wait for this simple line break right here. Here you go. Boom. All right. X marks the spot. We get that break. We catapult up towards these higher prices to take out some of these highs. And you got you a $10 move. Secure profits around here. Boom. That's what we got. All right. Listen, now money is flowing into the undervalued section as well. And the financials that they oversee. So the European banks have been seeing institutional inflows offering attractive dividends and value. So stocks you can mention here to your cohorts or your friends or your family, right? Whoever you want to talk to about it, let them know about the money in the European banks. I'm talking BNP, right? The EUFN, right? And again, the MSIC. So let's go ahead and go there. All right. MSCI. All right. Now, if you see this chart, all right, you see it's very, very pricey, 544. All right. And we're on a daily chart. We must reclaim over 556. Okay. We're showing some higher lows, but we're still in a downtrend. Okay. Haven't made higher highs yet. We got to get above the 21. Hold above and sustain above there, and get it past these previous closes in order for us to see some upside continuation. All right, now let's go to the weekly. All right, again, this is MSCI. All right, there we have it. All right, so listen, we are going to have to see a break above this weekly candle here. All right, we need a whole structure above this weekly candle in order to see some sort of upside continuation, but you want to put your stop. You want to put your stop if you want to swing trade. All right, we have to break above this high in the previous close of 544.11. All right, to put your stop, all right, at that close. All right, so if you're going to get into that, make sure your stop is right below here. All right, or below that next candle that's going to form. You want to watch out for that. Now let's move over to something more interesting. All right, so the U.S. small caps have really begun to outperform as expected. All right, it's really been expected since Trump has been doing what he's doing. We have all these headwinds coming into January, so it's very expected. Rate cuts loom. Domestic manufacturing is getting another growth push right now as we speak. So the large managing strategy is suggested that the broad exposure is going to ticker symbol SLY. So that's a Spider S&P 600 small cap. You may have never heard of that, but I'm going to show you right now so you guys can see. All right, that is SLY. All right, 600 small cap. And as you can see here on the weekly, we are bullish. All right, this is a telltale. All right, another reason why I'm bullish on the SPY again. This is bullish, man, and this is a telltale. Now, are we overextended? Who knows, right? Who could say we're overextended? The market can remain irrational as long as you can remain solvent, period. And so that's what we have on the radar. So that was another one. All right, now I want to move on to the big guys. All right, I want to move on to the big guys. Nvidia is going to play a really big part. All right, we've been kind of bullish on the chips. Right here we have price above our daily price movement range on Nvidia. It's getting hot in the kitchen for Nvidia, and so we want to pay attention to price action. And so what I'll say is AI isn't going away, but the specific segment of AI that's seeing institutional accumulation, that means money's being loaded up into the stock, people are interested. It's an AI infrastructure and semiconductors. That's what it is. That's what the money is going towards. That actual engine, all right, that is the actual engine of the AI revolution, all right? Semiconductors and the infrastructure, period, all right? Guys like George Soros has internally boosted positions in Nvidia, Taiwan Semi, TSM, AMD, and Broadcom, AVGO. Also, Cathie Woods has loaded up in AVGO, all right, a massive $137 million repositioning into AI chip makers. You want to pay attention, all right, so Cathie Woods also added some of the A&D as well, and it's a strong vote of confidence that infrastructure supply chains matter for the AI growth, even when soft valuations get shaky, meaning there's a lot of talk in the world about a bubble. Are we in a bubble when it comes to AI? Listen, AI is playing a very big part in things that I know about, specifically like productivity, right? And so if AI is helping companies speed up productivity, right, and the fact that people are losing jobs, they're losing jobs because AI is replacing them, which is a bad thing for people who do not know how to adapt to AI, then it's going to boost sales. It's going to boost the structure and their sustainability because now they're able to speed up work, right? It's very convenient for them. They're saving money. So this is the point of AI. This is why I say it's not going anywhere. And even with those types of talk and scary talks about a bubble, the fact that money is going towards infrastructure says a lot about the future and what it needs to sustain, all right, is power and growth. You understand what I'm saying? All right, so let's get back to Nvidia. So again, BlackRock, Cathie Woods, George Soros, they're loading up on stocks. AVGO, right? Amazon, Nvidia, Microsoft, and even Palantir. Palantir is even making a base right now on a monthly time frame that is so juicy. Wow, I just wouldn't want to miss it. Okay, so these are all core AI ecosystem plays, even though they're, part of the Mag 7, some of them, but it is still a big part of the AI ecosystem. All right, now right here on Nvidia, on the 4-hour chart, we do have some higher lows here. Keep it simple and stupid. We are above the 21. You guys know that that's my trigger. Okay, and we have a technical pattern here set up. We like the W shape. This is similar to the SPY. Rinse and repeat, deja vu. We don't want to make this hard. Make it simple and stupid, all right? Make trading simple. Once we get a break above here, that's your open range breakout. Put your stop below the 1 bar stop. You got to get that bar open, all right? You got to get that burst of energy. Now, if you're using that same green line, right, for it to break this neckline here, that same green line is at $100. $190.45. We close at $189.82. All right. That neckline top is $190.45. In order for Nvidia to see upside continuation Monday morning at open, we're going to have to see price get above $189.82. All right. And we're trying to see if $190.45, our neckline, can hold. Can we take those bears out? Can we squeeze the bears and get them to buy in some positions? All right. And so once you see that green line at your position, $190.45, you want to go down to the entry day, because now you're on the 4-hour, but you want to go to the entry day like a 5-minute so you can actually catch your entries and your exits. Understanding that green line represents a neckline break on the higher time frame, our 4-hour time frame. Are you guys with me? All right, you can use this tomorrow, you can use it next week. It really doesn't matter. If you need to look back at the video to understand, do that. Give yourself some grace and watch out, right? I do not want you chasing. Never chase, okay? Never chase. If you're not into a play, always wait for a pullback. I suggest waiting the first 30 minutes or an hour. All trading conditions are not trading conditions for you. If you don't understand market context, you're not going to understand all the nuances that come with trading. Sometimes it's a trending market, a narrow range market, and a test and retest market. That is context. Psychology doesn't mean anything in trading if you don't know context of the market. What is the structure? What's the story, the sentiment? Sometimes that takes screen time, years of studying, right? Intuitive feeling that you can always teach, but over time these things happen. And so that's what I like for people to understand when it comes to trading. And you want to be just vigilant out there. You want to wait for pullbacks. You want to get the best entry. It's a numbers game. And so don't ever rush. Don't ever chase. Always define your entry, your exit, and your risk. And you want to find the best risk to reward. For example, let's say that the market does fall here and we don't get above. The best risk to reward to the upside was right here at this inverse head and shoulders you see here. Okay, got a shoulder, and a head. All right, calls are bought here. We had a pullback by the 21, calls are bought. We have a higher low. All right, and we bought the pullback. All right, that was your best risk to reward to the upside. Right here might not be your best to risk to reward if you wanted the best price down here around 177, 175. But if we get a breakout, you want to lock in profits as the price moves up, because we could get a move up towards this fast lane. Nvidia can get up to 195. Absolutely, we can get up to 193, 195. It's no issue. All right, but if you're taking a breakout trade, understand that we could get a pullback before continuation towards the upside. So pick your poison wisely. You understand what I'm saying? Now let's check out Palantir. All right, you guys are asking about Palantir. We're going to check out Palantir. I tell you, these are the stocks to watch 2026. We got some things going on. We got a lot of boom going on with the AI and business and money being shifted. And so these are the stocks you want to pay attention to when it comes to, the money flow. All right, but beware, be cautious that some of these stocks like Palantir in front of you are very volatile and you get wild swings. They are susceptible to wild swings. And so you got to know what you're doing, meaning when are you getting in? When are you getting out? You need to establish your entry, your exit, and your risk. Now, there's a slingshot reversal happening on Palantir right now, okay? There's a discount happening, all right? And we are above the point of control. If we can get above 137.58, 137.50, there's a chance that we can make our way to 140, 142 for a small little risk to reward, all right? And we can stay stuck within this range, all right? But if we can break and hold over this range, here's the range here. If we can hold over this structure and see a technical breakout pullback, I want to buy the dip here. Okay, possible. Can we buy the dip here? Is that a scenario? All right, to catch the upside? Or can we just buy that double bottom and we just V bottom back up, right? You gotta wait. What's your poison? Pick your poison. Wait for structure to show you the story, and then you attack. That's what I want you guys to understand, because we have a lot of things on here. Your money is right in here. We have this overhead resistance that could possibly happen here. So you can assume that we're just going to continue higher once we get up to these certain levels, man. All right, the point of control is right at 175. All right, that's $30 away from where we are now. So remember this video, these are the stocks to watch, and I will be recapping. Now I want to move on to Coinbase. Okay, Coinbase is going to be last but not least, beside us doubling back, because the SPY will be opening up, and I know you guys want to see that. Coinbase is looking very interesting as well. Okay, I see a slingshot reversal, the same thing on Coinbase. I'm telling you guys, this market is heating up. This market is heating up, and we're already above the point of control here on Coinbase. I can see a possible push to 231. We are at 171 right now. I'm telling you guys, there's an opportunity. Now, if you want to buy shares or if you trade options, okay, options is something that I trade, and I'm going to briefly tell you guys this before we close the video up, all right, because you can make some good money. I'm not a financial advisor. I'm only a mentor and or a coach, okay? Seek financial professional help from those that you know who are professionals, all right? Those that you trust, like an Edward Jones, right? Like a Fidelity. But I want you guys to understand that options is what I trade. All right, there's futures market, there's forex markets. You can trade gold, silver, wheat, coin. All right, equities market, right? But I trade options, and we deal with contracts, just like car insurance. And so if I wanted to trade and make some money, then I would buy what they call a contract. And those contract comes with expiration dates. You know, contract comes with time, right? It's a certain time allowed for whatever deal you guys have in the contract. And so I deal with contracts, and you can buy contracts into the future, saying you expect price to rise over the future, and so you want to buy into that. All right, let me say that again. You expect price to rise over time, and so you can buy into the future. So you want price to rise. You want to have some time so you can gain all that equity. All right. It's expiration dates, 2027, 2028. Yes, you can buy in time and hold. You don't have to watch the screen all day. But if you want to buy shares, all right, you'll own shares of a company at a cheaper price if the company is valued way higher. That's the benefit of that. You don't have an expiration date when you buy shares, but when you trade options like I do, you do. And so even though we get a long time, like a year out or maybe 6 months out on our contract with certain strike prices, right? You see these numbers on the side? I go into the option chain and I buy strike prices. That's what I do. I buy the strike price and they have an expiration date. Now, let's say that I think that it's going to take, let's say, for instance, right here was October 23rd, 2025, right? And we are at 2026, February. So you got November, December, January. So about 3 or 4 months it took for Coinbase to fall. So we can assume based on structure that it could take another 3 or 4 months for us to go back towards the upside. So that would facilitate what? That would facilitate a swing trade. A swing trade is a given type of style that gives us time. We put enough time on our contract for our trade to work out in our favor. Okay. Now I want to show you what I mean. I want to show you what I mean by that. All right, this is the SPY and this is the option chain. You see these expiration dates on the side? Remember I told you you could buy into the future? There you go. December, January, 2028, 2027 January. And on the side here, you actually have these parentheses here and it tell you how many dollar movements that SPY can go up. And we can do the same thing for Coinbase. Coinbase has the same thing. That's a stock that we're just talking about. Okay, Coinbase, see, they also have expiration dates. Okay, and so if we want to put 3 or 6 months on our time based on that structure we talk about on that chart, then we would go out and count 6 months from now. 1, 2, 3, 4, 5, 6, right? Where we at now? March, April, May, June, July, August. All right. So maybe August, maybe January, maybe September. All right. And you look to the side and see how many points it could go and you get you some time on it. You click on it and you go see the strike. Remember we talked about the strike right here in the middle. Don't get confused. The gray one, the most gray thing when I'm hovering over, that are your strikes. You choose those strikes based on the price you see on the chart. Okay, I won't go any further because I don't want to confuse you. If you want more of that and you want to learn this game and you know hearing and watching that there's something more, then click that link below and join the thriving community. Leave a comment and engage, guys, and smash that like button if you've been enjoying this content so far. That's what it's about, us engaging and growing together. I want you guys to understand you can trade. If you're serious about trading, I have a community for those who are serious. All right, now let's get back to the charts. We're going to almost wrap this up. Now you can understand what I mean when it comes to Coinbase. All right, that's what you want to see. And so that's what I'm expecting, guys, for us to maybe see some continuation. All right. This stock is being bought up. The only thing that I see with the QQQs is the fact that there's still some hedging going on. And so QQQ is looking weaker than the SPY. And so I wouldn't rush to do anything on the Qs. But if we do break the structure here on the Qs, then we can see some continuation. But from what I see, from what I seen what the banks were doing, it's not really looking too good right now. I might be wrong, but SPY is looking a little stronger than the QQQ. They almost look identical actually, but that's what's going on with the banks. All right, and so just a double back to the SPY to wrap everything up. These are some of the stocks to watch. All right, exactly, yep. All right, so kind of similar, and I want to just throw on a little giveaway. I know I said it was over, but I just thought about ticker symbol NEE that I wanted to give you guys. All right, now this stock is setting up to be really, really good. This is the energy stock, and remember we talked about some of these risks when it comes to the World Economic Forum. This was very important. Remember those global risks. Read this report, guys. Check it out. Go to Google and find the World Economic Forum and find the website and go check out these global risk reports. Check them out. These are very important if you want to understand what's going on around the world and where the money is moving and how to prepare. That's the type of information that I'm always thinking about and I want to give to my community. So boom, there you go. And you have that. Now let's get back over to NEE. As you can see, this chart is beautiful. And I want to go long calls. I want to get expiration dates with time, right? Like we talked about. We already have a higher low here. We're above the 21. I like that setup. We have to see what happens Monday this week if we open up above 92.18. But price looks really good on NEE, so I wanted to put this on you guys' radar. Also, check out ticker symbol CEG. All right, and we are above the point of control. We're going to see how this works, see if we can get some continuation over these 4-hour and weekly bars. All right, ticker symbol CEG. All right, Constellation Energy. Remember, it's all about energy. I think your boy Warren Buffett is all over this stock. Don't quote me on that. Always do your research, okay? But we are making a inverse head and shoulders, maybe more so a V bottom reversal with a little bit of a pullback. If we can sustain these high lows, we can see some pressure towards the upside to go towards 335, 315, and 307 on Constellation Energy. All right, and I leave you guys with one more. Remember, you can always rewind these videos and go back, write down the levels. I want to move quickly to end the video because I've been giving you guys some game for way too long now, right? And I want to hold you all night long. All right, this ticker symbol here is FLNC. I can never forget this stock because it has NC in it, and I'm from North Carolina. Shout out to all my Carolina guys and gals watching the channel. All right, so this here is at a base. Now, right now, it's not ready to cook up yet, just yet. All right, it's just cooking up slow, but it's not ready. We're marinating the steak right now. And so, what you want to wait for is price to get above the point of control. All right, and the point of control is at 1775 on ticker symbol FLNC. All right, that's our early entry. All right, if we enter on that, put your stop below there. All right, if you enter on that to get in early, remember you're risking and getting in early. You want to put your stop below 1770. All right, 1775 is your entry. And remember that we can stop around 1889 because that's where another point of control is. And so this is where a small risk to reward for those who want to scalp or maybe catch a nice quick scalp day trade. All right, that's your window of opportunity. It is not until we hold above the point of control and get out of these squeeze and Bollinger Bands that we can squeeze towards the upside to fill in some of these gaps. All right, I do see this stock going up to $22 and 30, 25, 22, 30. These are my areas. I do see that stock going there. Remember that I gave you this video. These are the levels to watch. Above that 21, we need to hold above 20. Convincingly, 1975, we have to hold above it for at least a day, at least for 4 hours during the opening market in that 130 closing candle. If we can get that, guys, we can possibly see some continuation. So trade carefully. Please trade very carefully when you enter into these trades, and make sure that you define your entry, your exit, and your risk. If you're going to enter into a trade above the 21, put your stop 1 bar stop, guys. 1 bar stop. Don't make this hard. For example, if you enter into a candle, right? Price just left from down here, and I know I'm using red even though price is going up, but just for the illustration purposes, and you wanted to enter into this candle and price move, just put your stop right here, 1 bar stop. Put the stop right below that 1 bar you entered in. You guys with me? Are you really picking up what I'm putting down? I hope you guys are. All right, guys, listen, I'm gonna wrap that up. Appreciate you guys watching this top stocks to watch for 2026. All right, I'm gonna have a part 2 soon, of course, and I want to try to bring you guys some value over these next couple of months. There's going to be some headwinds coming, and I don't want you guys to miss any of the action. So that's your 2026 watch list for now. Backed by the global money rotation, commodities, super cycle catalysts, AI infrastructure demand, and real investing moves by Soros, Wood, BlackRock. Okay, if this weekly update is helpful for you, smash the like button. Please do that for me. Get this video out to those who need to see it. It helps the new YouTube algorithm. So also comment, engage with me, guys. If there any ticker you like or you want to see or want to go over, or anyone in this video that you like and you want to talk about, any questions, feel free to let me know below. And if you want some weekly updates on any more big money positions or sectors, also let me know. Leave the comment below. All right, hit that like, subscribe, comment on any ticker you want, and I'll be there for you. And if you want me to do a follow-up video breaking down buy zones and technical setups like cup and handles, inverse head and shoulders, or maybe gamma squeezes, let me know as well, and I'll make sure that I do that for you, because this here is the community where we teach people how to fish. I'm Coach UV. This is the Unique Trading Group, where strategy meets mindset and discipline turns into income. And I'll see you guys in the next one. Peace.